The market seems to be consolidating sideways over the weekend. We're hoping to see a directional move early next week as the traditional markets open. We're going to talk about that today, and we're also going to talk about December, because December is going to be an important month for cryptocurrency with the FOMC interest rate hike occurring. We're going to talk about the implications of that rate hike, how can it be bullish, and why it could potentially be bearish. Let's go ahead and dive in. Okay guys, welcome back to the channel. I hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today, discussing the price action, talking about the technicals, and of course we're going to be talking about the FOMC meeting in December. That is going to be a really important meeting, and we'll talk about why later in the video. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. Let me know if you have any questions down below or questions you want answered in a video. I do check all of your submissions every single day. I try to answer every comment. Before we get into it, also head down to the second link down below, get access to our Telegram channel, all of our updates, charts, analysis, information, and a whole range of more content to keep you up to date with the market. Of course, we do have a VIP sale at the moment, 20 to 33% off memberships. You can find our VIP trading records over here by clicking the links, or you can go ahead and find the information for the memberships over here. Let's get into the video. So, you have to forgive me, my voice is going a bit, I've been talking a lot, I'm losing my voice a little bit, but I'll try my best. So November, we are negative 19.4 for the month, coming down from about negative 18.8 yesterday, a 0.6% move to the downside over the last 24 hours, nothing too significant, again, just representing we are moving sideways. Quarter 4 coming up on the last quarter in December pretty soon. We have about 4 and a bit weeks to turn this green, otherwise we will close our first negative consecutive 4 red quarters in a row. Pretty bearish over there. Volatility over the last 30 days is 4.04. It has been dropping a slight amount over the last 24 hours. Again, over the last 4 or 5 days, it has been dropping from about 4.2. And volume is very low with liquidations very low. Again, this is just going ahead and indicating we are in this tight consolidation. We are compressing over here. Generally, when volatility increases, we see these moves. When volatility decreases, we see consolidations and sideways compressions. So what it is indicating is it is indicating that this consolidation zone is coming to an end. I've been saying it for the last couple days. We are going to see a directional move this week. We will see Bitcoin attempt the next directional move, whether it be a break of 16,800 in continuation or a loss of this level and a retracement back to this lower range. We are going to see a directional move. We will not see the sideways continue for the next few days. In the next 24 to 48 hours, I would say 48 hours, we are going to see the next directional move. Okay, let's go ahead and take a look at the rest of the market. So, DXY, downwards consolidation over here. We do have this downward trending line, resistance over here. If the DXY can actually open above this line here, we can see a push upwards. Of course, pushing upwards over here on the DXY will result in cryptocurrency and stocks falling down. They are inversely correlated. Breaking through the 106, we can see a push up to 107, potentially 107.5. Getting over 107.5 to 108 will clear this local top. That will enable a push back to 109, which would be incredibly, incredibly bearish for the cryptocurrency market as well as the stock market as a whole. To the downside, guys, if we do break below 15, 0.57, 0.53, we will see that continuation towards 0.37, and that will be very bullish for the markets. Total cryptocurrency market cap, again, did find a lot of support down at this range over here. We are expecting a continuation upwards if we do push past 16,800 to retest the 50 EMA, potentially to retest this major chop zone, which of course is a lower support line of the descending triangle formation we developed over the course of 4 whole long months, okay? Breaking back through this level will enable a retest and break of this trend line, sending us into a market-wide uptrend, a new uptrend, and we'll discuss that later. Of course, alternatively, if we do lose this level, guys, we are heading back down to 570 billion in market cap, which will bring Bitcoin down to about 13.9 to 12,000. We can go in and see the levels over here. We'll see a retest of this range, which of course reaches these points here, okay? Dow Jones breaking through 34,000, looking pretty decent here. Again, markets are closed, so it's very hard to say what's happening. If we do see it open above this 34,000, we will see a continuation higher, most likely to 35. We will meet the next local resistance. Okay, breaking through this resistance will allow a push towards a new all-time high. S&P 500 still under major downward sloping resistance. Of course, it's downward descending trend line over here. As you can see, our bear market trend line. If we do push upwards here and break through this level, we can continue. We will definitely need to break through this local high here at 4,300 to see the continuation upwards to this next high around 4,600, okay? Until then, the loss of this level, the reclaim of this low will take us back down to 3,600, potentially even lower if we lose the 3,600 level. So definitely keep an eye on that. Bond yields, again, not too much over here, and let's move on. So, Bitcoin analysis, what are we seeing? So from a structural standpoint, guys, Bitcoin, of course, is still in very much the same pattern we've seen over the last couple of days. Really not that much has changed. I'm not going to lie, we haven't seen much change. We have genuinely just seen this sideways consolidation. But generally, when we create these sideways consolidations, we end up developing new patterns particularly on a smaller time frame. So what are we seeing here? Let's go ahead and draw some trend lines in. We are seeing a nice pennant formation developing on the smaller time frame. We can take a few different trend lines from these tops, draw them down, and put them in. We have a pennant formation right over here, okay? So we have actually developed a new pennant over here, a small time frame pennant. Again, if this does break upwards, this will enable a measured move, retest and break of 16,800. That would take us to around $17,000, okay? We already know, guys, if we do break through 16,800, we will see a continuation to 17,000 to 17,300. And of course, if we break 17,300, we're going up to 18,165. Okay, 18,165 is an incredibly important level on the chart. The 18,165 level actually marks this bottom point of the upper resistance zone that Bitcoin faced between June all the way to November. Okay, this upper line over here that I'm pointing out here, this line right over here, it's 18,165. So that will retest that market-wide resistance. At the same time, the total crypto market cap will be retesting that resistance over here. Okay, so it's a market-wide resistance. To the downside, of course, guys, if we do actually fail to break through and we fail to get back up that trend line, we will see a continuation through back here. We will not hold, we'll head back into the zone. If we head back to the zone, guys, we already know looks very bearish. We're going to be continuing down to about 13,900. So very straightforward, guys, for the structural analysis. Pretty much exactly what we've been saying for the last couple of days. I'm not going to go into it too much just because we've talked about this, you know, a couple times now. Last couple of videos, been talking about more or less the same information. My chart just disappeared. So let's go ahead and do a technical analysis next. I've got no clue where my, if anyone's watching this, no clue where my price action's gone. My chart's completely disappeared. Anyway, let's go ahead and do a technical analysis. I might just refresh the page. Okay, there we go. So we'll go down to a smaller time frame and have a look and see what's going on. So on the hourly chart over here, let's go ahead and bring up some more indicators. We can see the VRPV over here, again indicating we do have this high volume chunk zone right over here, which is our POC line. The POC line is currently sitting right at 16,566. Exactly where Bitcoin has just rejected that last hourly candle from. That, in fact, is a pretty strong support line. In fact, if we go ahead and move back, we can see a numerous retests of that line over here, rejections and breakdowns over here, supports over here, and again these high wicks down and below through this zone, again indicating, you know, pretty strong support resistance. So we do have this resistance zone right over here. As you can see, breaking above that resistance, we have the VIP volume starting to drop off until we reach that 17,200-ish level, which is where that next trigger point is. So what we can say for sure, guys, if we're able to get above, I'm gonna go ahead and change this to black. If we're able to get above that POC, okay, which will enable a retest of 18,600, we're going to be able to see a move continuing us up to about 17,200 to 17,300, which we already know is that major horizontal resistance right over here, okay? And again, that will take us up to that next chunk, which is around 18,100. So the move upside is pretty relevant. It's pretty possible to the upside. Again, the VRPV is suggesting that. To the downside, we do have a pretty strong support range over here. As you can see, we have a pretty large amount of support and volume in this lower range that does extend down to this lower area of this pennant. As you can see, again, a lot of support over here in this range, indicating a loss of this pennant will take us back down to around 16,200. Again, that will be our next support range. Losing that, taking us back down to this very low support range down over here, 15,500. And of course, we have basically nothing under that on the smaller time frame. So for the VIPV, it does suggest, again, we are facing resistance here. We are still in consolidation. We do have a nice chunk of volume developing around about this level, which has been developed through the price action over here. Again, indicating we are kind of developing some support, but we are technically underneath that large chunk of support. We are on the bottom end, and there's not much below us over here, meaning that if this price action starts moving downwards, starts breaking through some of these levels, we can see this trend continue downwards with some degree of strength. So we are keeping that in mind. Moving to a larger time frame, let's go ahead and take a look at the 4 hour. We'll go ahead and bring up our VRPV. We can see on the 4 hour here, we are, this is very interesting. We are struggling a lot here on the 50 EMA. This is consolidation if I have seen it. Sideways 50 EMA, very, very interesting. Basically a straight consolidation. The smaller time frame moving averages are just under 50, which again isn't indicating a lot of strength. We do want to see these smaller time frame moving averages push up above the 50, and the 50 can continue to consolidate at that point, and then they kind of converge upwards together. That would indicate strength. Right now, it is indicating weakness. Again, that can change. It's on a 4 hour chart. Right now, at this very moment, it is indicating weakness. It is indicating that we could potentially actually reject and come down lower until these smaller time frame movers actually are able to cross over that 50 and we're able to get some positive strength in that trend. I'm going to leave it there, guys. I think that's enough. Let's go ahead and talk about this. So the CME Watch tool, of course, is where we look at the Federal Reserve's interest rates. FOMC meeting is in 17 days and 14 hours. Take a look at the data over here. 50% hike, 75% of people are expecting, and a 75% hike, 24% of people are expecting. So what impact does these interest rates hike, or what should I say, what impact do these interest rate hikes have on the market? Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to the reward center, where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. And why is this one going to be so important? Well, first and foremost, based on a structural stance, the reason this one is going to be so important is because the market is just genuinely in a very delicate position. If we take a look at where Bitcoin is, okay, right over here, and we take a look where the stock market is, okay, right over here, we know that the market's in quite a delicate position, meaning we're at a break or make position. We're at a point where we can get heavily rejected again, or we're at a point where we could break out of this massive long bear market downtrend and continue upwards. This is the bear market downtrend. This is the bear market resistance. Breaking through here means we break out the bear market. Bitcoin. This is the bear market downtrend. Okay, this descending channel. Bear market downtrend. Bear market resistance. If we break out of here, we break out of the bear market. So the market's in a very delicate spot. And the reason interest rates are so important is because they define the systematic risk in the market. And based on the systematic risk in the market, people decide whether or not to invest, or how much they should invest, whether they should take loans to acquire assets, etc. So let's talk about that. If the interest rate hike is positive, 0.5 will be positive, the market is expecting that, we should see a positive reaction to market, because that indicates that inflation is coming down. But more importantly, it indicates that the interest rate hikes are doing their job at bringing inflation down. So if the interest rate hikes are doing their job at bringing inflation down, we can expect the next quarter inflation or next month inflation to be significantly lower. And the lower inflation goes, the lower the rate hikes need to be to counteract that inflation. And the lower the interest rate goes, guys, the more positive environment is for the market, the lower the systematic risk becomes. Now, systematic risk over here is the risk in the market that are caused by factors out of your control. Inflation, interest rates, taxation policies, monetary policies, everything that affects your investment that you cannot directly control, that that the people owning the company that you're investing in can't directly control. These are things that affect everyone and every market simultaneously that you can't change, okay? So as systematic risk goes down, the beta starts to decrease, okay? So this is a rise in systematic risk, okay? The beta increases, okay? This is the beta, it increases, it moves along, okay? As the beta increases, the risk return becomes worse. We get a worse risk return, okay? As the beta decreases, the risk return becomes better. So we're looking at a systematic risk to decrease equals better market environments for risk taking. Therefore, return on investments in terms of risk become more favorable. People are more likely to acquire assets on debt, companies particularly, and people are more likely to invest in assets as the return on these investments become more favorable again. Therefore, the market rallies. Here's another thing. I've been saying this for a long time. If the interest rates come out positive, we don't necessarily need to see interest rates completely invert. We don't need to see a flip in rates. We just need to see proof that they are starting to come down significantly, and the market will generally front run that, okay? Meaning that the market anticipates what is occurring and it reacts based on anticipation of what is going to happen rather than directly what is happening, okay? We've seen it numerous times. The market rallies based on speculation about Fed pivots. The Fed didn't pivot, the market rallied in anticipation. It rallied like 14% and then it crashed, okay? So it usually moves in anticipation based on perceived systematic risk rather than the actual systematic risk itself that has a longer, prolonged, and more sustained effect after the initial news drop. Meaning that the market does now expect 0.5. If we start getting some negative news towards that and we start expecting 0.75, we will see a market rally to the downside, okay? I'm gonna leave it there, guys. My voice is completely cooked. I hope you heard what I was saying today. I'm gonna have to just give my voice a little bit of a break. But with that being said, guys, I'll see you tomorrow. I hope you have a great day. Cheers.